I think that the Fed's going to pause in October. But when you're cutting interest rates from a very low base, the ability for you to stimulate the economy is very limited. And you look at the housing market, the bond market's already given the housing market a 100 basis point cut over the past year, and that's helped the housing market.
Yeah.
So I think if the Fed is selling what they've done so far as insurance, and they talked about the uncertainty about what's going on overseas, and now all of a sudden maybe you get a Brexit deal, maybe you get some sort of China truce, whatever we want to call it, that why not wait until December, for example, and see how things play out? Because
Do you think that's what they're messaging lately? I mean, we heard Charles Evans kind of speak to this point yesterday, Kaplan, some of the others. I mean, are you hearing enough to convince you that there's really not going to be a rate cut?
I think so. And you're going to have already two dissents we know are locked in. And not much in the economy has really changed since the last meeting and going into the meeting in 2 weeks. So it's not like some of the doves will have more reason to act again. I think what's wrong with waiting to see how things go. But even, again, how I started, a rate cut's not going to matter. A rate cut's not going to offset tariffs on $360 billion worth of goods and the potential for more in December.
Yeah.
Rate cuts from a very low level are not going to matter.
Barry, do you agree with that? I mean, how much importance are you placing on the October cut if it happens? How significant is the fact that we just didn't have further tariff hikes this week, or maybe the market hoping we don't get that $150 billion tariff hike in December?
I think it just adds a little confusion. I don't really think it has much of an impact, just like Peter said. I kind of look at the market today as kind of like a corn maze. That's what we have back in Ohio. And you go down one and you get impeachment, another slowing economy, another, Iran or China, and it kind of leaves investors in a hard place.
And we know people have pulled a lot of money out of this market. The bearish level is very high in the individual investor survey. The bullish level is very low. Does all of that make you more optimistic? I mean, here we are sitting 2% from all-time highs. At the same time, for 18 months now, the market has been choppy and overall more or less sideways.
Yeah, all that confusion, and yet the market's going up.
Yeah, exactly.
And the long-term momentum is positive. The macroeconomic indicators we follow are actually starting to turn up a little bit. The raw data that comes in, the hard data that is coming in better than expected. Now, it's not great, but it's better than expected. So all of those things would lead us to believe that there's still upside left in the market.